Hi, this is Ernie. I'm that guy who had $6 in his checking account to now having millions of dollars. Today, I want to talk about how to make more money using your money. And I have been showing you guys how to do it by investing and leveraging options. And for those who watched my videos last week, QBTS 5x, now close to 6x return, maybe even close to 7x return. SOXL officially 4x return. NBIS 3x return. A lot of the things that I've bought has gone up so much. But this also creates a problem because now everything is overbought. And now we're getting into a massive AI bubble. So what I'm doing is I have liquidated everything related to AI, such as NVIDIA. After getting 40x return, I'm out. I am getting out of SOXL. Some I sold last week. Some got exercised last week, so they're all gone. But some, it's going to get exercised this week, so I am in the transition of exiting out. This does not mean that there's no place to make money. Your money will make you continue to make more money, but you need to learn how to pick a sector just in case. And to me, it's more of not if, but when the AI bubble bursts. And let me show you one, statistics around why we think there's a bubble or if there's a bubble, and two, which sectors did amazingly well during the last dot-com bubble burst, so that you'll be able to think about whether these are the right decisions or investments that you want to get into. So let's dig in. This is one of the guys that I follow, and he posted not too long ago. This is from Market Watch, as you can see. Dot-com parallel leads to fear of what's next for the record-busting stock market. And this is where we are. 2020, that was when tech sector performed so much better than compared to the entire S&P 500. And where are we? We are actually even higher. This is how much and how expensive some of these companies are. And you might be like, oh, I thought P ratio doesn't really matter when there's a growth stock. Yeah, it doesn't matter until it actually starts to matter. Let's go to another chart. This is the Warren Buffett indicator at all-time high. Look, I wasn't alive during the early 70s. So I only read about it, but internet bubble, 2 standard deviation. And where are we? Even higher. Yes, we are even higher. And this was the bottom of the financial crisis in 2008. So when it's hitting that 2 standard deviation, it comes down. When it's hitting the standard deviation on the bottom, it comes up. And now we have gone over. We are so overbought. I think it's just a matter of time. Things are going to come down, and whoever is selling the last is going to pick up the tab. And this is precisely why I exited so much, and I'm hoarding as much cash as possible. But let's look. I mean, you don't want to be completely out of the market. Might not be a bad idea, but in my case, because I retired and I want to use profit to pay my bills, I'm going to try to get to 60, maybe 80% cash, but rest of them I'm going to continue to do cash secure puts or cover calls in order to continue to pay my bills without having to save or take money out from my investment account. So let's see what sectors did well after the dot-com. As you can see, this is AI from Google. You could do your own research. It has all the links. So market downturn from March 2000 to October 22. Look at what happened to technology. Went down 77%. So if your entire portfolio is in technology and you have about $1 million, you're going to lose $83,000. You're going to be back to having $23,000. Given how big this bubble is, I think it's going to be even lower. Look at Cisco and Oracle lost over 80% of their value. S&P tech sector dropped more than 48%. Communication, I remember Lucent, terrible, right? Company just went bankrupt. But before company went bankrupt, they would go up 100% every 18 months or so. So I used to have a lot of money in there. I didn't pull it out. So this is my painful mistake that I made. I was too vested when all the signals were there and lost everything that I invested in Lucent. .com companies, startup companies, a lot of them disappeared. Some of you guys might not remember, but Excite search engine, Lycos, Yahoo, Ask Jeeves, Webvan, Pets.com, a lot of them just completely shut down. And now let's go to what has performed the best. Consumer staples, things that you have to buy, like toothpaste or Spam. Believe it or not, when there is a big mess like this, they cannot afford to go get good piece of meat. So ground beef actually does well. Spam, not the email spam, but the little canned meat, which I absolutely love. They tend to do well. Look what's next. And this is why I have been buying LABU as well as PILL, because healthcare does extremely well. And then lastly, utilities, because they're not sensitive to economic fluctuation. And this is precisely why I am getting into UTSL, which I'm going to show you right now. UTSL, 3X fund, right? UTSL, utility companies. And what do they have? It's all the large companies, NextEra Energy, Constellation, Southern, Duke, Vistra, American Electric Power, Dominion. A lot of solid utility companies that will be able to weather this storm and continue to not only provide you incredible amount of dividend. So as you can see, previous dividend, 17 cents, which is not bad when everything else is losing money. And I think this is the winner when, not if, when the AI bubble bursts. You might be saying, hey, Ernie, you sound really pessimistic. Only because I learned my lesson by not pulling my money out when every other analyst during that time was talking about how there's a bubble, how a lot of these companies' revenue is not sustainable, how the P ratio is like absurd. I was so greedy and I did not want to hear it because I'm so focused on making money. And this is precisely why I went back to reading this too, so that I can invest that's undervalued. I can come in and out when there's an economic cycle and I understand where and how to invest, how to take money off the table when there is a bubble that's so visible. Even Sam Altman, the OpenAI, bunch of CEOs says, yeah, there is a bubble. But they're like, but we don't really care because it's not their money, it's the investors' money. This is how complacent some of these CEOs are, rather than, of course, I mean, they want their stocks to do well, valuations to do well. So they are serving their own interest, not your interest or my interest. So get a copy of a book like this. This is so popular. This is the book recommended by Warren Buffett. Get a copy from the library rather than buying it, and learn how to invest during a boom and a downturn properly, so that you can not only preserve your wealth, but you know how to make money even when there is a recession or there's an event like this. Again, thanks for watching, and I'll see you guys soon.